Here it is again, right? Resurfacing U.S. China trade tensions. Is China bracing for more Trump backlash on trade?
Well, they're certainly aware that the rhetoric is being ramped up again in Washington. Of course, it ebbed and flowed in 2017, and they know now that there are sounds coming out of the White House, coming out of the administration, from officials there suggesting that they are going to be taking a tougher line on the U.S. They're also aware, of course, that President Trump has on his desk a couple of decisions to make when it comes to whether or not he wants to impose tariffs on steel and aluminium imports from China. And, of course, they're aware that President Trump has failed to reduce the deficit with China. And in fact, for 2017, it increased by about $25 billion to $275 billion. And as Nomura analysts have pointed out, there's the midterm elections to factor in as well for 2018, and whether or not that will make the Chinese whipping boy again for the GOP and for President Trump. So all of those factors are certainly being considered by officials here in Beijing, and they won't have missed as well the fact that the US have been taking a tougher line on some of these deals, whether that's Ant Financial having its deal to buy MoneyGram being blocked, or whether Huawei's attempts to tie up with AT&T being blocked as well. So all those things are being weighed by officials here. And of course, the Chinese have been very clear, saying that if tariffs are imposed, they will retaliate, and therein lies the risk.
Yeah, but the big event, certainly, Tom, is really going to be the GDP numbers that come out tomorrow, as well as a slew of other Chinese data. What can we expect?
Yeah, that's right. It's worth looking at the GDP numbers, of course, that come out tomorrow, but also in the context of this US-China relationship, which most economists now say is potentially the largest potential headwind to growth here in China for the rest of this year. But the expectations are that for the full year of 2017, we're going to see GDP ticking up 6.8%, which will be the first time that it's expanded full year since 2010. And as you touch on, we're going to get another round of data points out as well as the GDP number, including things like retail sales and industrial production. They're both expected to remain relatively in line with previous numbers, or the previous month's numbers, but the investment is expected to tick down somewhat, and we're also going to be looking at leverage and the broad money supply as a percentage of GDP, because that is expected to tick down for the first time since 2011. Also, the property sector, that's expected to show a bit more positive sentiment in 2017 after a bit of a difficult 2016. And then, as I said, overall investment in things like roads and bridges and railways, that is expected to have slowed for 2017. In fact, many economists say that investment will continue to ebb lower this year, and that the property sector as well could be something of a drag on the growth picture. But we're going to be getting all those data points out tomorrow at around 3 p.m. Beijing time.